Okay, well, thank you. Welcome, everybody. Welcome to my webinar, broadcasting live from Mexico City. This is me, myself, my picture, Alberto Alvarado here. Subscribe to my free YouTube channel before it is too late. Go there, type iiivb Street Room channel in the search box in YouTube. You subscribe to my free YouTube channel. I was explaining to other fellow traders that this, and I've been saying that this latest month, that this channel was supposed to become more active, like more or less in October. Didn't happen. It is getting more active now, but not in the way I really wanted. But well, something. Maybe the other plans that I have will happen someday in the future. Maybe in 3-4 months. But well, at least now I am trying to activate that channel. And overall, this channel will be very useful for us because Donald Trump, thanks to the Trumponomic approach on economics and foreign affairs and everything, it's simply weird. So yeah, that will be translated. It's been saying and explaining volatility, erraticness. Yesterday I was commenting that fortunately we have more certainty on what's going to happen. On the Brexit side, finally we know what we were thinking of, but now we have the certainty. It's going to be a hard Brexit. There won't be any kind of something in the middle happening. I love that, I must admit. Not a lot of people love that. Overall, some richest one in the UK, and of course some other people that maybe they are not rich. Because yes, it's always very fancy and lovely, the EU idea, feeling part of a multinational entity and call you European. Unfortunately, the final results have not been good, so maybe it's a wise, it is always a wise decision between human relationships to split at some time if things simply go wrong. Because if you wait, they get worse. And if you wait more, they get worse. And they can get really, really bad. So, yeah, I believe it's responsible. I believe it's the consequences. These are the consequences of the mismanagement of the EU, sponsored by the leadership of Germany through Angela Merkel. This is a natural consequence. But you know what? When you look and now, after some months after Brexit, all the nonsense, all the psycho feelings after Brexit, it's not that bad. The UK just wants to do what Switzerland never stopped doing. It's being independent. Now, Switzerland is doing it very good, actually. So, yeah, maybe it's not that bad idea at all. Maybe at the end, it's a good one. I strongly believe, as I've been talking to other traders, and throughout all these months after Brexit, that the UK has something special, at least in my opinion, and they will know how to capitalize on new opportunities in this. Overall, did you notice that Ms. May said several times to open ourselves to old friends and new ones? She said that like 10 times or something. She was sending a message. To whom? I can bet you that the first one is Donald Trump. The UK is stating now that yes, they are willing to continue with the alliance with the United States, but not only the United States. I doubt that she was referring to Russia because the UK is really especially paranoid on Russian issues. But maybe she was talking about China, for example. So Donald Trump is going to have a very tough administration because I believe that he believes that everybody believes that what he believes is the best thing. But actually it is not. and it's not the only way to go. It's going to get very interesting. As I said yesterday, thankfully we will have the pound to trade, because besides trading bearishly the Mexican peso, then I'm going to show you what this Mexican peso did yesterday. It was amazing for the dollar and terrible for the peso. But these are the consequences. So we're going to focus on these two assets, as I stated yesterday. I don't see any other clearer assets to trade worldwide, and I'm talking not even commodities, gold, nothing. And you will see that all the volumes worldwide will focus on these two things: Mexican peso, because it's a no-brainer, that's bearish, but lately the pound. And you know what? That will bring a lot of soothing to the markets. The markets are really willing to are looking for some kind of certainty, some kind of alternative. Let's call it leadership, because this speech, I know that if you are pro-European or even UK citizen and you dislike Brexit, maybe you don't agree with me, and that's a good thing, because the idea is not to think everybody alike, but to share ideas and exchange them, not necessarily to change our convictions, just to enrich the environment. But I do believe that with this statement, Ms. May really gave one step away from Donald Trump. Because I believe, and it's clear, that Donald Trump wanted to leverage his leadership on UK Brexit. And with this latest speech, it's very clear that it has nothing to do how Donald Trump's mind works and the rationale behind Brexit. It's a complete different thing. We're going to check that out. Not without before showing up a little bit. Why not? This is me myself. This is the FX community account. In the trader contest, I'm in 32nd place, at least so far. I don't know in some hours, with an equity of almost $300,000. Okay. Yesterday, I had really minimum gain, and actually I descended to the 43 or 44. So yeah, I made like what, 40,000? No. Yes, like $60,000 in profit, and I only ascended like 10 places. So again, this gives you an idea how difficult this trading contest is. But well, why I'm doing this? To show you that it can be done. It's very strange that somebody that is in the trading competition, besides the winners, the 3 winners every month, they broadcast a webinar sharing their experience, etc., on the trading contest. But it's very difficult that you find somebody that decides trading it, delivering webinars every day. So that gives you a different, like, you can acquire a slight different approach, focus on this, on what happens. I'm not saying I'm the best trader, because of course I am not the best trader. But the thing is that, yeah, if you see that somebody's in profit and is talking to you about the contest almost every day, that could help you to get better in the trading contest, at least to give you some clues. Okay, so well, this is it. This is the overall statistics. This has not changed because I reached at maximum 54% of drawdown. My monthly profit and loss is $191, almost $192,000. Profitability 192%. Demo subscriber 8. That yesterday a AAA rated. It was this guy's name. Explain me something that I never understood. Why you, even if you have here subscribers in the here in the contestant table where you are put in among other traders. This is the demo subscriber. So I was always thinking, why I have 8 here and I have none here? I never understood that. And he explained yesterday that it's only when you have a trader copying at least 80% of your trading volume. Something like that. So that explains why this, I mean, having these numbers is good because the more you have here, your total qualification increases. So you have more chances to win, of course. This is the qualification when you use 100% of conditional orders, the ones that we have here. That is why I explained 2 webinars before, that if you really want to make it in the, at least in the top 30, top 10, whatever, you really need to do this because if not, this the penalization will have a real weight in the future. So as you can see, I'm holding the 100% conditional orders. I must admit that when I started trading casually the trading contests before, I always dropped them because the drawdowns, etc. But I barely used conditional orders. But as I explained in the webinars, if you really want to succeed in this trading contest, you need to understand the reasons why behind the conditions of the trading contest. Okay, so I was pushed to adapt my trading style to the trading contest to use only conditional orders. So it was a nice experience because that pushed me a little bit forward. And it was a nice thing. So yeah, now I have these 50 points. These are the blog points that when you publish on the Ducat, no, in the traders blog, every time there's a way to qualify that you receive likes and from community support, and the amount of likes that you receive, this will increase. For example, Chase wins. Either he hasn't written any blog post, or he hasn't received any likes. Here is the same thing. Redaxis from, I believe this is China or Morocco. I don't see well. It's just as me. We have 1 like. Okay, but at the end, this is the difference in the qualifications because we have different equities. I have a higher equity here. If you can see here, this guy has a higher equity, and even though he doesn't have any like, since he's in higher equity, he deserves more points. Okay, so okay, let me take this out. This is the chart. I explained in other webinars the importance of diversifying overall your risk at the beginning, because the trick is to be in the markets at some time and allow that at some time when you are in the right direction, let the trades run. This is what happened. I hold positions negative, close most of them. Then I had positive, negative, positive, negative, positive. But here, I started having better trades, holding them longer because they proved to be right. And this is what happened. So don't worry, even if you're trading live accounts or contest accounts, whatever. It's normal. I mean, it is very difficult that you find somebody that never makes a mistake. I can tell you that yes, you can find it, even you can make it, but that cannot last forever, because the markets are not something that you can, it's not a precise organism. It's a biological organism with emotions. And emotions, at times, they play like very strange tricks on ourselves. And the markets are alike. So you can mathematically trade a market, but at some moment the emotions will flow into the markets, and then your mathematical models could fail at least one time. So yeah, it's natural to be wrong and to hold draw. The idea is that you need to cut your losses at a rational and a logic price to precisely allow that even if you have several continuous bad trades, you can survive one day to trade, to live another day to trade. Not to wipe out your account stubbornly holding onto a negative position from the very beginning just because you don't want to close it. That's not the trick. It's the complete opposite. In order for you to have more chances to be right, you need to be willing to close the losing ones at a logic price or condition. So after having some hours without activity, yesterday I had this good movement to the upside, then a drawdown. But as you can see, I didn't close any trade. I had two trades opened. They were two longs, two bullish trades, one in Swiss franc versus Japanese yen, and the other one was euro versus Japanese yen. After having this drawdown, I looked again the markets and considered that, yeah, the potential of the movement was still active to the upside, and that's exactly what happened. So the temptation of not closing losing trades and closing beforehand positive trades is the perfect recipe to failure in the markets. You need to be able to hold the temptation of grabbing the quick buck in the positive trades and to resist the temptation of not grabbing losses. So I decided here, and look, I got even lower my equity before I opened those trades. I made an objective analysis. I said, okay, yes, the market still have chances to go further up, and it did. And not even after hesitating here, I let them run a little bit more until I just felt that it was enough. Yes, felt. It was not a rational decision in this time. Trading is a mixture of two things: your right side of the brain, your left side of the brain. The left is the logical, the language side, and the right is the creative, intuitional. Both work for this. At times you enter because you feel. I don't recommend beginners to do that because that's the toughest thing to do. Intuition in trading is something that either you are born with it or it will take you a lot of time to develop it. But yeah, and at times, just mathematically, it's a good chance to enter a trade, for example. At times it could work, at times it doesn't. It couldn't, but well, the idea is to take the risks, to measure the risks, to have more chances to trade even if you are wrong, like for example what happened here. So yeah, even having 50% of drawdown, even wiping out at some moment with floating losses 50% of my account, it is still possible to do this. Okay, so yeah, it is possible. Statistics, now I have 29 trades. My average position, 2,600,000. If you're interested, the webinar 2 days before, I really got in-depth analyzing this thing. My average trade lifespan is 20 hours. As you can see, I am not grabbing the quick buck. You can see it here. My average positive pip position is 78 in euro-dollar equivalent pip dollar. It's 78 pip, and my average negative trade is minus 53. The last time this was pretty much equal. I believe it was 53, and here it was 60 something. Now it increased, but it is not the 1 to 10 or something. So it is not necessary that you put yourself to be only in 1 to 10 trades, 1 risk to 10 reward trades, nor 80% of success. Now I am 52% win-loss ratio. The last time that I was at 43rd place, I had here 48. So yeah, this is more or less in the very long term, the ones that really make money in the markets constantly. it's very difficult that you find this differently. Because it is not how many trades you are right, it's how you manage your losses, how you manage your winnings, how you manage your lot sizing. You don't need to be good every time. A misconception, I'm not saying that doesn't work, but at least in my case, that hasn't worked. But if that works for you, it's okay. The idea that you are meant to lose a lot of trades in the market, and you're going to, the only way to put back in profit your account is to grab the 1 to 2, 1 to 3, 1 to 5 trade, risk reward trades. But that's not necessarily true. It's a complex combination of factors, as you can see here. The thing is that you find a combination that you can handle, and then you can repeat every time. If you can repeat every time being 50% here and being able to do this, you will be in profit. That's it. Even less. So this gives you again an idea. There is, as I've been saying, there is no exact good right way to trade. Okay? There are as many successful and unsuccessful approaches to the markets as traders are in the world. But the thing is that you find your niche, what works for you, because necessarily you will understand better some approaches than others. You need to find it. But yeah, maybe having expectations of 80%, 90% win-loss ratio forever, it's unrealistic. You can have winning streaks that even could last months, even months of not committing mistakes, but at some point you will commit one. The thing is that when you do that, you don't wipe your account. You don't wipe all your profits, right? That's the thing. Well, I believe I just finished with the trading contest updates. Close this. Now, let's focus on the pound. Because something interesting is cooking in the pound. And let me screenshot the hourlies. This is the 4-hour. And this is the daily. Reviewing quickly yesterday. Yeah, after having Miss May's speech, giving some room to breathe to the markets, giving some release on the pressure that maybe the next months or even years were going to be a complete uncertain and erratic. Maybe the pound gave the capitals a way and a place to flow, at least temporarily. That is why we had this huge candle to the upside. Even though we had yesterday pullback, but I believe that this really doesn't matter, because this movement to the upside, after having confirmation of Brexit, this could be a good thing. I see very difficult that the market could consolidate below 1.2. Maybe I am wrong. Maybe I am calling this too early. But it simply feels that circumstantially, maybe the traders are going to start flowing in the pound markets, at least to make this gap after weekend gap after Brexit to be closed. So yeah, what I expect now is that the market will try to get to the 137 to close this gap, and then if things really look bad for the worldwide economy due to Trumponomics, then maybe we could have another sell-off. But I believe that markets are getting gradually confident in the pound. Okay. Some people believe that this pullback is the first step to continue selling off. I see it very difficult, because the markets, remember, their job is to anticipate the facts. Of course, since nobody has a crystal ball, the markets, when they anticipate incorrectly things, they adjust quickly. Here, the markets were discarding a hard Brexit. They were pricing in a hard Brexit. That is why the pound continued selling off and selling off and selling off. But now that we have the confirmation, the market recovered. Why? Because there is no reason to continue holding, for example, shorts on cable when you confirmed that your prediction was correct. Then is when you take your winnings. When you said you anticipated correctly and when you had the evidence, then you take profit. That is why trading the news is tricky. And it's not strange that you have positive data on dollar or whatever, and you see the price exactly doing the opposite. It's not necessarily doing the opposite. The meaning is traders beforehand anticipated correctly that number, traded maybe from non-farm payroll number to non-farm payroll number is 1 month of difference. So in 1 month beforehand, positions start building up, trying to anticipate, let's say, the next non-farm payroll number. If the non-farm payroll number ends up being very close to the number that these entities anticipated, you could see the complete opposite reaction, because that confirms that they anticipated it correctly. But it's not that easy, because yeah, at times they move in favor. So what that could mean, it's tricky. Trading news, it's like a very Wild West thing to trade. I don't like it that much. But well, this is the idea why people thought if we have confirmation of Brexit, overall a hard Brexit thing that happened 2 days before, the markets supposedly should have sold off, right? No, not necessarily, because the market were even pushing the price very low. Very, very low, even on a hard Brexit scenario. So that is why the reaction was completely on the opposite side, and heavily on the opposite side. 4 hour, Miss May's speech. Well, we started Monday with this gap. Miss May's speech, boom, 124. Let me check something. Okay, I will give you a detail. I've been talking about this at times. Okay, let me just upload it. Sorry, give me a second. Okay, give me a second. I'm going to screenshot this again because I want to show you something. Take a note on this because this is important. Wait a second. Here it is. I want you to look at this. This is a 4-hour chart. Maybe the only intraday really relevant chart. Besides the 2-hour, I mean the 1 hour is traditional. But for me, the 2-hour and the 4-hour are the only really reliable intraday charts to make intraday analysis, at least to give you context on very small movements. Look at this. When the MACD crossed and stabilized at 0, is this price zone, all this price zone, including these tops. Now the MACD just broke above these hills in MACD. Wait a second. Yeah. The prices are hitting this area. That is why the market recognized this and started selling off. This doesn't necessarily mean that the bears are actively here positioning themselves looking forward for the prices to break the 1.2. This has an alternative explanation. Correct or not, it's an alternative that you need to consider. Technically, this is very relevant. While in zeros, the market did this, signaling this resistance zone. Look at this. I didn't draw this resistance just taking good-looking supports or resistances. That you said, okay, this looks good, and I would put a resistance here. Yeah, it would have been a good resistance. But when you draw resistances based on certain patterns overall using MACD, you can increase a little bit of quality, and I will repeat this a little bit. This is not the holy grail because that doesn't exist. But when you use this kind of logic, you will start knowing at least what kind of quality of resistance, in this case, this line is. When you draw this and you see this pattern, for example, and here, Miss May's speech, increase the volumes, is the highest volume since, what date is this? Week 44 last year. That is exactly October 26th. Since October 26th, we haven't had this much volume in the 4 hour. Okay, this gives you an idea and gives you validation that something important happened. That made the MACD to cross to the bullish side and to break these previous hills that correspond to here. So you have two validities. First, the latest, 6 months, no, 4 or 5 months, something. This is the highest volume yesterday. Using these correlations of this MACD breaking, you use these levels, you recognize them, and then you see, oh, that is why then the market retraced, not because maybe there are here active bears. This is maybe a take profit target area for the bulls here. And then you have another validation while checking, oh my God, this line respected beforehand this level, and look at this level. Another curiosity. Well, this is not as precise because this huge candle to the upside made the MACD cross the zero line. But, well, you could even consider that this line could find another validation point because it made the price, at least the MACD, cross the zero line. But, well, you get the idea. It's not just drawing resistances and support just because they are good looking. You need to go further. You need to find the logic behind it. Okay? So my explanation, 124, and besides this line is very close to the 124. That is why exactly, why the markets didn't, the bulls that bet buying the 120s and betting for the gap closing. Why they didn't just take profit at 122, 123? Why 124? Why not 125? Well, because mathematically there are correlations that indicated that this was the optimal price to bet the highest take profit target because of these correlations. And I am only using now the 4 hour chart. When you go to the 1 hour chart and you add up this analysis to the 4-hour chart, and then you feed back those both analyses with the daily chart, and then you use those 3 analyses and add up the 30-minute chart, it gets exponentially difficult. But you will start seeing these kind of things over and over and over again. And when you find this kind of resistances, because you will find this kind of things in every single time frame. When you get used to them, you will start knowing where are the real deal resistances and supports. That doesn't mean that, for example, here, you will have a drop. Maybe what I expect at least is that, okay, price will stabilize here, and maybe we'll try to make another wave here, and maybe it will drop down and maybe stabilize a little bit. I don't know what will happen. I believe that this will continue going up because the context. But answering the question, why 124? Yes, it's a psychological level. It looks good looking here, but there are reasons behind it, mathematical ones, that will help you qualify this. Like, this is a little bit better resistance than maybe the 124.50, or maybe the 122, or maybe the 123. The 124 was like the most attractive one. Okay? Take note on that. Drawing resistances and supports, the most correlations between price indicators you use, the better quality those trend lines will have. That won't give you direction, because not because you find a high quality resistance means that the price will stop inevitably there. No, that means that in any case the price in this case went up. It's a decent take profit zone. Usually that creates a retracement, usually. But even if that doesn't happen, that is, even if the price continued moving up, grabbing profits at 124, it would have been maybe the best trade ever. Okay? Let's start thinking as a profitable trader. Resistance means take profit target in any case that you are long, but not necessarily means that the price will stop there. Okay? And again, just because we had a price maybe retracing at a resistance, that doesn't mean necessarily that that resistance is a high quality one. That is why trading is so strange at times, because you say why some psychological levels work better than others that are even better good looking. Okay, you need to cross all this information. It's exponential, because if you have, let's put it, 3 data of this in one chart, and you have 2 in another, you have 3 by 2, and then if you have in another chart 5, then you have 5 by 3 by 2. So this gets exponential. But you need to take your time to learn this. Okay? This is the 1-hour chart. And at least some minutes ago, this is how this looked. Okay. We know now that the 124, 123, 80, what kind of meaning trading is about, grabbing the better meaning, the better explanation, the better reading of what the market is doing and why. Now, when you analyze that in the 4-hour chart, you can understand better that what happens at this zone should be read as a potential good take profit zone that maybe is just a temporary stop in a bigger and longer bullish move to the 137 because of the context of latest mismade speech. Regardless this assumption is wrong or not, you need to start thinking this way. Trading is about becoming a detective. You need to start building your case. It's not just seeing a resistance and selling, or seeing a bottom or a support and buying. You need to know the whys, the meanings. It's like understanding every resistance like um, like an actor in a movie, and try to get into the mind of that actor, why that actor is that way, what's in his mind, why he thinks that, why he reacts that way. Maybe he was left alone while when he was a kid. Maybe he had bully problems. Maybe that is why that is that aggressive. So this kind of psychological analysis is valid in trading. Because remember that everything that happens in the markets are humans there. Even though a lot of trades now are made by computers, the trades are made by computers. But the ultimate decision of whether to go and how to understand in the context, because yes, do you believe that there is but any slight possibility that you can program in a robot a potential speech like the one that happened 2 days before? There is simply no mathematical way to factor that in. How you factor the word allies, how you factor the word allies said 10 times. But that is not possible. So the ultimate decisions are taken by humans. To start understanding charts, single thing that happens in charts, like a character in a novel, in a movie, not like a line, but like a person. If a line, for example, here we have a person, this green person, meeting this blue person, and then this green person meaning again different people. There's a correlation here and here. Which one is? We have a triangle, but we have a context in the 4-hour chart, and we have a fundamental context that is Miss May's speech. It's storytelling you the forex market, figuring out a way to make to give alternative meanings to what you see. I remember when I started trading, the very first steps, and I couldn't understand why. What was the secret? How come somebody watching the same chart as me could grab a profit and I couldn't? I was like, okay, what they see in the charts, or they use secret weapons or something? No. It's how creative you get. And this is one point to start. Maybe you're not that good at imagining novels, but maybe you are good at imagining, I don't know, football moves, for example. If you're naturally kinesthetic people that like sports and is good at sports, challenge you trying to read and to translate the meaning of what the market is doing, the correlation between price and a line. I don't know, maybe why not to imagine a position in football, I don't know, and having a fumble here in the third quarter, I don't know, something like that. That is why trading is so personal, because nobody will never ever read for the same reasons the same information. We could end up concluding the same things at times, but using complete different procedures. If you have a musical skill, okay, maybe you can find a way to translate this into something musical. Use your natural skills. Start with that. That is your edge. People look for the edge in trading, like if there is something outside. If there was something outside. No, the edge is inside, and it's already there. If you don't know your edge so far, you're doomed. Not only in trading, in life. At this moment in life, you really know in what areas you are better than others, or that you have natural skills for. Try to find how to apply that into trading. Creatively, there is no way. That is why this cannot be instructed by nobody. That is why these called gurus are, it's a misconception. They cannot teach you. You only can learn it because only you know, I don't know, maybe you get inspiration when it rains. So maybe if you imagine everything in a context raining, maybe you get a better understanding of trading. So how in the hell you could find that written in some place? That's impossible. So this is a personal experience, and I'm more or less giving you the clues. As you can see, it's hell difficult. Not because you imagine something, that means that you will get the right meaning. Okay, but these are the first steps. This is why you can see traders watching the charts hours and hours, and you say, what they are seeing, they are not seeing with their physical eyes. They are seeing with the brain eyes, with imagination. Those are the eyes, the real eyes of the brain. So never forget that. If it works, that at least this guy that comes and talks, delivers webinars all from Monday to Friday, 1 hour or more, and now you're seeing that, yeah, he's at 32nd place and it's maybe making some sense in what he says. Well, maybe if you want to find some kind of validation of this information that I'm giving you now just because I'm in the 32nd place, do it. If you still believe this is garbage, well, okay, good for you. Okay. But the thing is that, okay, maybe this guy has some ideas. And the idea is you need to do the job. You need to learn to train your inner eye, your brain eye, that is your imagination. It's very specific shape. Every brain is different because we can see the same apple differently. This is the same thing. So start looking less with your physical eyes and more with your imagination. And then when you have a more or less clear imaginary picture, using images or sounds or smells or tastes or movements, etc., then you open the door for making a rational analysis and to feedback both of them every time. So yeah, imagination is not enough. You also need to use the rational side. And then that rational side will feed the imaginary side, and then that will feed back another one. So it's tough. It's what is called, it's a high performance. It's like the Olympic athletes. They are high, how they call it? High performance athletes, something like that. This is the same. This is a very high performance brain activity because your mind should never be bored trading. If you at some time get bored trading, you're not doing something right, because the markets give you too much information that is just so unmanageable that the only way that you cannot continuously imagine is because you're simply not wanting to do that. That is why once a trader, always a trader. And this is a lifestyle, because this shifts and shapes your mind to start figuring things in a certain way every time. Okay? Let me see if I can find something interesting. I believe that I'm going to show just quickly the Mexican peso chart. Here it is. This is the Mexican peso chart. Well, maybe grabbing the context of this is difficult if you don't follow the Mexican peso. But the only thing that I can tell you is that we are hitting historical highs. Well, maybe not necessarily yesterday, but this day. and this will continue moving up. If you're curious, go and check how it looks and in what percentage. Okay, well, just then, as a curiosity, if you're curious, go check the Mexican peso, and we will talk about that tomorrow, because trust me, Mexican peso is going to be the thing to watch, not to trade, to watch tomorrow. That is when Donald Trump will swear as a President of the United States in functions. So for me, it's time to say goodbye. I would like to thank Katerina for hosting, all the shy and quiet guests. I see new people, ZB, receiver, something from South Africa. Sorry, I don't know how to spell your name. And I would like to thank you, everybody, for showing up. Remember that I broadcast every day from 7 a.m. to 8 a.m. GMT time. Check your local time equivalent. And tomorrow we will analyze the Mexican peso just as a curiosity, because we're not trading at all. Okay, we will just watch how the market plays this thing. The markets already know what is going to happen, so theoretically we won't have any surprises. But well, we don't know if this guy in the inauguration speech says something that simply spook everybody, so we need to watch it. So I would like to thank everybody for showing up, Karina for hosting, and remember that I expect you tomorrow at the same time, same place. This is Alberto Alvarado. Remember to trade safe, be safe, and bye-bye.